Imagine working at one of the biggest financial firms in the world. You're in a high-ranking position, surrounded by billions of dollars in investments, and the world trusts your company to handle sustainable funds that are supposed to help the planet. But then you discover that much of what's being advertised is a lie. What would you do? Stay silent and protect your career, or risk everything to tell the truth? This is the incredible true story of Desiree Fixler, the woman who took on one of the most powerful names in finance and exposed a scandal that shook Wall Street. Wall Street has always been a place of ambition, power, and wealth. But beneath the glossy exterior lies a world where the truth can be bent, numbers can be manipulated, and image often matters more than reality. In recent years, the hottest trend in finance has been ESG investing. Funds that claim to be good for the planet, fair to workers, and governed by ethical principles. For investors, ESG sounds like the perfect combination. Do good and make money. But as the money poured in, so did the temptation for companies to exaggerate their green credentials. One woman, Desiree Fixler, saw behind the curtain. As the chief sustainability officer of DWS, a major asset management firm, she had a front row seat to how the ESG industry really worked. What she discovered didn't just risk her job, it threatened to shake public trust in the entire idea of sustainable finance. Her decision to speak out would set off a chain reaction of investigations, raids, and reforms that proved one thing. Even Wall Street's most polished image can crack when the truth comes to light. Number one, the rise of ESG investing. Over the past decade, ESG, short for environmental, social, and governance, investing has exploded in popularity. Investors are increasingly looking for companies and funds that not only promise strong returns, but also claim to help the environment, promote social justice, and follow ethical governance. Asset managers have capitalized on this trend, creating sustainable funds that attract trillions of dollars. The idea is simple. You can make money and do good for the planet at the same time. But with so much money on the line, the temptation to exaggerate or outright lie about ESG credentials has become a major issue. This practice, known as greenwashing, is exactly what Desiree Fixler would soon uncover. Number two, who is Desiree Fixler? When it came to the world of banking, Desiree Fixler was hardly an outsider. With decades of expertise in investment banking and sustainable finance, she had established a reputation as someone who understood both the financial aspects of investing as well as the ethical responsibilities that come along with their practice. She was given the position of Chief Sustainability Officer of Deutsche Bank's Asset Management Unit, DWS, in the beginning of the year 2020. Her responsibilities included managing assets worth more than $900 billion. dollars. Her job was to make sure that the company's environmental, social, and governance, any ESG claims, were accurate, and that investments actually satisfied the standards for sustainability. At the time, DWS was making public representations of itself as a pioneer in environmental, social, and governance, ESG investing, which would soon be subject to a great deal of scrutiny. Number three, the red flags begin. Shortly after joining DWS, Fixler noticed something strange. The company's public marketing materials claimed that more than half of its assets were ESG compliant. But when she looked at the internal data, she found inconsistencies. Many investments labeled sustainable didn't actually meet recognized ESG standards. The policies were vague, the criteria unclear, and in some cases, the data to back up ESG claims simply didn't exist. This wasn't just sloppy reporting. It looked like a deliberate attempt to make the company's ESG profile appear far better than it really was. Number four, pushing for the truth. Within the company, Fixler voiced her concerns and urged senior executives to be more open and transparent, as well as to clarify ESG standards so that they were more in line with reality. Her belief was that the company should refrain from embellishing the numbers and instead be truthful with its customers. On the other hand, she encountered opposition rather than acceptance of her suggestions. According to her, the corporation was more concerned with preserving its reputation in the public eye than it was with rectifying information that was potentially deceptive. The further she pushed, the more uneasy her posture got under her circumstances. She was aware that she was disputing a narrative that was worth many billions of dollars, and that this may generate fierce adversaries. Number 5, the shock firing. After that, Desiree Fixler was abruptly terminated from her position in March of 2021, just one day before DWS was scheduled to present its annual report. It was said by the corporation that the reason for the termination was differences in vision, and they stated that she was not a cultural fit. Nevertheless, Fixler found the timing to be questionable. She was under the impression that efforts were being made to quiet her before the deceptive ESG claims could be questioned in public. The fact that she was fired not only resulted in the loss of a prominent position, but it also put her residency in Germany in jeopardy, which caused acute turbulence in both her personal and professional life. Number 6, going public. Rather than remaining silent, Fixler made the decision to engage in combat. Her charges that DWS had exaggerated its environmental, social, and governance (ESG) assets were revealed in August 2021 by the Wall Street Journal when she went to the media. The spark that started the fire was just like this. Her assertions brought the attention of authorities in both Germany and the United States of America in a short amount of time. An formal inquiry into greenwashing was launched against one of the most prominent names in the world of global banking for the very first time. And it was all in response to the fact that one woman refused to remain silent. Number 7. The regulatory fallout investigations into DWS have been initiated by supervisory authorities from the United States Securities and Exchange Commission and the German Financial Supervisory Authority, BaFin. The German authorities even conducted raids on the company's offices in Frankfurt in the year 2022. The incident compelled DWS to reduce the amount of its stated environmental, social, and governance (ESG) assets, and to confess that its sustainability processes were not as rigorous as advertised. Despite this, DWS continued to deny any wrongdoing. As a result of this case, it became one of the most prominent examples of how authorities were beginning to take greenwashing seriously. Number 8. The bigger problem with Wall Street. However, the DWS case was more than simply a single scandal. It brought to light a systemic issue that existed inside the financial sector. ESG funds are worth trillions of dollars, but because there are no criteria that are rigid and established, it is simple for businesses to manipulate the reality. In addition to misleading investors, greenwashing undermines genuine sustainability initiatives by rewarding businesses who speak the talk but don't walk the walk. Greenwashing is a form of corporate corruption. How much of the environmental, social, and governance (ESG) industry is predicated on trust, and how fast that trust may be misused, was brought to light by Fixler's narrative. Number 9. The cost of speaking out. Being a whistleblower is never easy. For Fixler, going public meant burning bridges in an industry where reputation is everything. She faced legal battles, public scrutiny, and the personal toll of losing her job. But she also became a symbol of courage in finance, showing that one person's integrity can challenge even the largest institutions. Her case encouraged other insiders in the financial world to consider coming forward with their own stories of misconduct. Number 10. The legacy of the scandal. In the present day, Desiree Fixler continues to advocate for increased environmental, social governance, regulation, as well as corporate accountability. As a result of the DWS crisis, regulatory agencies have tightened their definitions and increased their enforcement of deceptive sustainability claims. Greenwashing has not been eradicated, but the case has made it more dangerous for businesses to inflate their environmental, social, and governance (ESG) credentials. Fixler's efforts, in the end, did not merely expose a single company. Rather, they generated a discourse all around the world about the importance of honesty, responsibility, and the genuine meaning of sustainable investing. Desiree Fixler's story is proof that even in the face of immense pressure, the truth can't always be buried. She took on a multi-billion-dollar company and sparked an international investigation, showing the world that integrity still matters in finance. If you think more people should hear stories like this, hit the like button, subscribe for more deep dives, and tell us in the comments. Do you think ESG investing is still trustworthy, or has greenwashing ruined it for good?